I'm finding that sellers are looking at the peak price, and when they're not getting the peak price, they feel like they miss out. Like I would even feel this way, like, oh, I'm stupid. I should have sold then. I should have sold then. When in reality, I think you should be looking at what you bought it for, what it's worth now. And typically what you're going to find is you're up probably 10, 15% annualized over, 4 or 5 years. And of course, if you're selling and going to buy, you're going to get the discount on the buy as well.
There's that intro once again, Scotty. After last week's episode with Christian Janice, we've got pretty good feedback on that one, and I think the people are enjoying having these guests on and just dropping some knowledge. I don't think people know what happens behind the scenes on a real estate transaction. We're going to continue that theme today with the boys from Premium Insurance. Right, we got Nabil and Omar here. They're going to drop some insurance knowledge on us. Again, when we do these real estate transactions, everybody plays a role. The lawyer plays his or her role, and you have to have insurance as well, right?
No doubt. Yeah, we all have a general knowledge of how this stuff works, but to hear it directly from the experts that do it every day, day in, day out, 24/7, you just take your knowledge to a whole other level. So it's great to talk to these people, lawyers, insurance people, mortgage specialists, all that stuff, and get that deep level of knowledge.
Absolutely, 100%. Speaking of deep levels of knowledge, looks like it's our turn to drop some knowledge out here. So let's do a nice little market update here. What is going on out there, Scotty? What's happening?
Yeah, it's definitely. I think some people are saying it's a balanced market, but it feels like a buyer's market. I don't know if we're on the same page there. We're seeing the days on market rise, and we are seeing the impacts of higher interest rates. Every time they announce the interest rate hikes, we're seeing a slowdown in the market. So. Any thoughts on that? I know we have another interest rate hike coming up September 7th.
Yep.
How do you see that impacting the market? How do you see that playing out?
Well, we're tracking everything right now, and we're trending. We're losing about $10,000 a week on average sell price. We'll see if that trend continues as we approach the end of August and we get our August numbers in. But yeah, another interest rate hike is going to further slow the market. More opportunity for buyers, but the buyers just aren't out there right now. This is the frustrating part. We've never been more busy, but the average days on market are obviously a little bit longer now.
Yeah, and it's interesting. It's not like there's zero buyers, obviously. We do have some listings that are quite active, 20, 30 showing sometimes. It's just that they have a lot of options, not just in our market in Windsor, Ontario, but also all across Ontario, whether it's the GTA, London, Kitchener-Waterloo. Prices are down across the board, so you have opportunity everywhere. We're not the last stop anymore.
Right.
Where we had those Toronto buyers that had nowhere else to go that they could afford, drive to, qualify, and next thing you know, they end up in Windsor. They're working from home and all that stuff. So it's not like those people are gone. We still are the most affordable market in Ontario, one of the most affordable in Canada. But it's definitely not the torrid pace that we were at before.
There's opportunity in their own market now, right?
Big time.
Why would you uproot everybody, friends, family, when your own market presents opportunity? So we lost that buyer pretty much. They're still out there here and there, but people are moving now for specific reasons. We're almost getting back to the locals trading real estate back and forth, which is an exciting and fun market to work in as well. I think pricing wise, we're still priced here, and all the buyers can afford is here, right? So
yeah, I think people are not understanding how much of an impact these rising rates have on affordability. When you go and get qualified now, they're qualifying you at 6.25%. And it's going to probably go up September 7th if they raise rates another half point. You might be qualified at 6.5 or 6.75%. You're just not going to be able to get $1 million mortgage anymore, or a $900,000 mortgage. It's going to be $650,000, $700,000. So those $1 million homes are going to have to decrease in price unless it's a special home that has a lot of qualities that the people that don't really care about interest rates can afford. The prices are going to have to come down. And like you just said, right, the seller's expectations are not coming down to buyer affordability.
This is not a issue of what the buyers want to pay, or they're trying to get deals out there, although they do want some sort of a deal. But it's based on their affordability,
Yeah.
and the two just aren't meshing right now. But we're working towards it as the weeks go on. The sellers understand this, the sellers realize this, and we're working towards what I think is going to be a very balanced market in the upcoming months.
Buyers buy a house, yes, but what they're really buying is a monthly payment.
Yep.
And monthly payments, when the interest rates they're up 10x, right? Bank of Canada rate was 0.25, now it's 2.5%. That's 10 times in 6 months or so. So your monthly payments, a lot of people are double, right? Yep. So if you're buying a $1 million home and your payment was whatever, I'm just making up numbers with $2,500, now it's $4,500 if you're going to buy that same home. The average person's not going to be able to, even if they could afford it, it's too tight for them, right? We don't want to spend $1 million now, we want to spend $850.
Yeah.
Right. That's where our monthly payments feel comfortable. So the buyers that are out there are looking at their numbers, they're running their estimates at those higher rates, and they don't want to pay $4,000 a month. The prices are going to have to come down until we reach affordability.
Yeah, and going back to what you said, they're buying a monthly payment essentially.
Yeah, exactly.
And I think we're well on our way to the sellers that realize that are the ones that sell.
Yes.
Right. And special real estate, there's still good real estate out there that will demand top dollar. In every market, good real estate's good real estate.
Agreed.
And that will always sell for a premium.
Yeah, so what we're seeing right now is the average property, where there's 20 or 30 of them available in the market. Those are the ones struggling to sell. Let's say your average raised ranch in an average location, your average 4-level split, 5-level split. There's just so many of them on the market that unless you're a special, or whether it's special in terms of your location or your size, or level of finishes or price, right? You've got to be lower than the other properties, but nobody wants to be the first one to lower the price.
Now, Dan Morar on our team just called in with a question. I mean, he just emailed me, but are there any types of properties that are holding their value more than others? Great question. Townhomes. I'm seeing townhomes really hold their price.
Why is that?
I think there's a couple reasons. I think the end user for those homes necessarily doesn't need a mortgage. They're at a different stage of their life where this is their final downsize. A lot of them are mortgage free, so they are having to sell to purchase this, of course. But the interest rates don't really affect them.
Mm-hmm, mm-hmm. Yeah, right? The easy, low living, low maintenance living. You've typically got condo fees there that cover your grass, snow, lawn care, all that stuff. When you're 70, 80, 90 years old or whatever, you don't want to do that stuff. I don't even want to do it.
Yeah, when you're 41, I mean,
right. So that they're definitely holding their value. What else? Like we said, the premium real estate, those ultra premium locations.
Location.
St. Clair Beach is the
LaSalle's, backing on to waterfront. Well, actually, waterfront's a little bit diluted right now. There's a lot of stuff. If you take a little whip down Riverside Drive there, you see a lot of for sale signs. So again, townhomes, in my opinion, are the ones that are holding.
Yeah, they're the ones that are standing out
the best. Yeah. But again, even those they come with a little bit of extra baggage. These offers, a lot of times they have conditions of house to sell. Scotty, everything I'm getting right now is for the most part has some sort of conditions, if not the higher stuff that people aren't first time home buying. They're coming with that house to sell condition, which as a realtor, to be honest, is kind of a dream come true, because we were starting to take the guessing game out of it, right? Where the delta's being set on one side. And listen, it's either going to be set on the purchase or the sale. It's typically set on the purchase. Okay, this is what I'm buying this for. I will go through with this purchase as long as I get X for my place. Yeah.
So on the buy side, it's great if you're a seller and you got the house to sell condition in an accepted offer. Obviously, you're sitting on pins and needles until the
sellers are frustrated a little bit right now. But you know what? It comes down to the average days on market. Scotty, what do you think that average days on market is pumping out right now?
So we're hovering around 23 or 24 days on average. That's up from 10 at our peak. Right, you list something, and within 7, 8, 9, 10 days, it's sold.
Yep.
Obviously, we're up to 23, 24. That's on the rise as well.
If I listed something that took 10 days, I'd be absolutely embarrassed in February, March. I wouldn't be able to look at my kids in the eyes.
Yeah, it means you significantly overpriced it at that point. So what does that tell us? It tells us that you can't expect to list your house and sell it in 10, 11, 12 days anymore.
No.
You need 24 days for people because there's so many opportunities on the market, people are shopping and they're taking their time.
100%.
It's just like if I'm going to go buy a car, I'm not going to go walk on the BMW lot and just buy whatever. I'm going to go shop around. I'm going to look at Audi. I'm going to look at BMW. I'm going to look at all the options.
Yeah.
I'm going to price compare, and I'm going to make an informed decision. Whereas where you didn't have time to make a decision, okay, you take an extra couple breaths and the prices are up 50 grand,
yeah.
right, over a month or 2 months. So people didn't have time to shop. Now you've got time to shop. That's why the days on market is increasing. And we're getting hit with another rate hike. We'll see if that adds another 2, 3, or 4 days onto that.
You got to educate at that kitchen table. And again, it's by far is it not doom and gloom out there. This is a very active market. It's a very we're heading towards a very healthy market. Things are selling. You got to put your best foot forward though, and you got to understand it's not February, March. It takes some time to sell right now, but the cream always rises to the top. So it's all about that preparation, all about those conversations initially that you have. It's all about your realtor being your consultant and making sure that you're provided with the proper information so you can make proper decisions for yourself and your family. That's what it boils down to. And patience, a little bit of patience.
Yeah.
We all got an extra 24 days in us.
Yeah, some psychology in there as well. Like I'm finding that sellers are looking at the peak price, and when they're not getting the peak price, they feel like they miss out.
Yeah.
They feel like, like I would even feel this way, like, I'm stupid. I should have sold then. I should have sold then. When in reality, I think you should be looking at what you bought it for, what it's worth now. And typically what you're going to find is you're up probably 10, 15% annualized over, 4 or 5 years. You're way above an average increase in the housing market. It's just not the peak, but you are still up significantly. And of course, if you're selling and going to buy, you're going to get the discount on the buy as well. So it's just like accepting the market and accepting how things have changed and not trying to fight it or beat yourself up about it. Because in a downward market, the longer you wait to sell, the more you could theoretically cost yourself until we reach a balance, which we don't know when that could be. It could be 6 months, it could be 12 months, it could be 18 months, it could be next week. Not sure. But you're playing with fire a little bit. So
I think Q1 of 23, we see some balancing out there, and I think for the rest of the year, it's going to be a little touch and go out there. But again, it's all about exercising that patience and setting the tone with the sellers. By no means do we want to sell them a fake bill of sale, and you just got to give them the cold hard facts and then work with what you have. And you know what, as an agent in this market, you got to work harder. But we work hard in every market, but this one is it's more phone calls, it's more follow up, it's more all that stuff.
Education, all that stuff. Watching the market like a hawk and paying attention to the trends. And I like what you said about Q1 because the announcements so far are a rate hike in September and another one in December. So that's going to be another 0.5 to 0.75% total in that time period. And then after that, let's hope that they slow down on the rate hikes. I don't think they've announced anything beyond December. So if the market gets clarity and they say, hey, we're done raising rates, we've reached our balanced rate where we're not impacting the market one way or another. This is our neutral rate. Now the market can get back to some sort of normalcy. And it's hard to make a decision when you got a looming rate hikes ahead, whether you're a buyer or a seller, right? It's just like, well, why would I buy now if they're going to raise rates again and the prices are going to come down? Yeah. So we need clarity. Hopefully we get that. Once we get it, I think we reach balance and we still slowly start to, maybe tick up a little bit.
I think
over
so.
time.
Yeah. I think it'll balance, teeter, and then uptick.
Yeah.
But that is Scotty, that's an absolutely National League market update right there.
Agreed.
Between the two of us, you did a fantastic job.
You as well. Nice.
Proud of you, man. But the show's not done. We've got, in whether you're buying or selling in this market in January, February, March, July, August, September, even in December, if you're selling on Christmas and you're closing on Boxing Day, you need that insurance.
No doubt.
But the question is, do you need house insurance? And I think we'll answer all of these questions and more when we bring them boys from Premium Insurance on the show here. And we're actually going to bring Dan on, and he's going to co-host this segment with myself. And so you can get out of here, and then let's cut to it, and let's get to the boys from Premium Insurance. Drop some knowledge.
Looking forward to it.
All right, and as promised here, we got the boys from Premium Insurance. We got Nabil and Omar. I always love to start out when we have people on. I know you got that nice office on Dougal. We've done some business together on the insurance side and the personal side, of course. And how'd you guys end up where you're at right now? What's the story? How'd you end up in insurance? How'd you end up here? Why insurance? And why'd you open up your own brokerage?
Well, me and Nabil, we actually worked at another brokerage for many years. When I was younger, a lot of people, when they get into this industry, they don't just wake up one day and they say, hey, we want to go and pursue a career in insurance. But the funny thing about me actually is when you finish high school, I think you graduate from high school, you're 17, 18 years old when you graduate. I went to college for a few years, 19, 20. By the time I was 21 years old, which is considered a very young age, I was a licensed insurance broker by the time I was 21 years old. So, you can say a few years later, by the time I was 27, me and Nabil, we opened up our own brokerage. So it's something that basically, it's something I knew that I wanted to do. And I'm a people's person. I enjoy dealing with people. And from a young age, like when I was 21 years old, very young, I decided to pursue this career. So I guess that's how I got into it. I enjoy dealing with people and I enjoyed risk management. And it's a fun thing to do.
Yeah, I think we're in similar fields, right? Where you got to be a people person. I mean, by no means was I born, and my parents were like, you know what? I hope he's a realtor one day. Yeah, I really hope he is. Same with yours, right? Oh man, I hope he's a great insurance broker one day. But you just land where you land, right? And then when you find kind of your niche and you kind of get good at it, you're like, oh, maybe I should water this a little bit more. So to get to your level of owning your own brokerage and your own business, I mean, that's impressive in its own. And I understand you guys are pretty busy right now, eh?
We are, yeah. For a brokerage, we opened in July of 2019, and the pandemic came around shortly after that. We were still able to grow an average of like 30% a year. It's got a lot to do with the factor that we are a brokerage that sells for a variety of companies, which gives you a variety of products that you can go ahead and cater to. So when it comes to people buying investment properties like student rentals or multi-property units or commercial properties, we have the market for it. So it's obviously gotten us busy that we can pretty much accommodate anybody, whether a realtor calls us last minute or a lawyer calls us, we can go ahead and accommodate and make it happen. So with good service comes, good.
You guys are an insurance broker. So what's the difference between somebody that's at a specific brand of insurance and you guys being the brokerage? What would you say the big difference on that is?
So truly what gives us the edge is the biggest thing as being a brokerage is, like Nabil was saying, is we get to touch a lot of markets, right? We sell for a lot of markets. For example, if you have an agent, they might only sell for Allstate. If he works at Allstate, they would only sell for Allstate. It's one company. So they're very limited, right? And as realtors, you guys know, a lot of your clients are going to be buying investment properties, complex risks, and a lot of insurance companies are not going to touch those things, right? For example, I can use is knob and tube, right? You're going to have knob and tube wiring, you're going to have galvanized plumbing, things around those lines. A lot of insurance companies that only sell for one market, they're very limited. Now, as brokers, we can sell for multiple markets, which basically gives us a solution to every problem.
Well, let me touch on knob and tube there a little bit, and I bring you a deal. It's got knob and tube wiring. Of course, we want to disclose that, right? The last thing we want is something to happen, and we didn't disclose that it was knob and tube because that's not going to be a good ending for anybody, to be honest. So I bring you a deal with knob and tube. What's that process look like for me as a realtor representing my buyer?
So with knob and tube, most insurance companies, what they're going to want is they're going to want an ESA certificate within, let's say, 30 days. And that's if the knob and tube wiring is connected to most insurance companies, right? This doesn't go across the whole board, but this will say, as a rule for about 70 to 80% of the insurance companies out there. If you have knob and tube in the house, a lot of times they want you to remove it within 30 to 45 days. So they'll sell you an insurance policy, and then they'll put a warranty on it saying that, you got to remove this within 35 to 40 days, and you got to bring us an ESA certificate to prove that it's been approved and safe. A lot of the times, if the knob and tube is connected to no major appliances and it's less than 10% of the home wiring, the insurance company might not require you to remove the knob and tube. They'll let you keep it, but it would have to go to a substandard company. And the substandard company, really what that is, as you guys know, being in the real estate business, I can give you a good example would be like a B lender.
Right. Yep. Understood.
You guys as realtors also educate your clients, right? Yeah. Educate your buyers. So you got to tell your buyer, if you're buying a home with knob and tube, understand that there's a cost to it. it's going to cost you more. So you'll find an insurance company that will say, yeah, we'll do it. You're going to pay a premium for that.
Yeah.
But knowing buy this home, but know that it's a future plan that you got to remove the knob and tube.
Higher
These
risk,
things-
higher
Correct,
payment,
100%. You know what I mean? Especially right now for you guys, how it's a buyer's market, it's a time for you to negotiate on these type of things. And if it does have knob and tube, you know, you can try to like get a deal on the home or whatever the case is. Because there is a premium to it. And then, for example, if we sell policies where a person says, okay, I'll buy the home and I'm going to go ahead and renovate it, I'm going to remove all the knob and tube, we can sell you a 3-month term. So, okay, for 3 months, go and finish all this stuff, then we'll flip it over into a homeowner's policy or a rental property, whatever you decide you want to do at that point. So there's a solution for everything, guaranteed.
I mean, those are one of those things where, you know, we run into these stuff. I mean, I know when we all show houses here, we look for the big 7: roof, windows, furnace, AC, wiring, plumbing, water in the basement. So
Correct.
we show houses to our buyers. Yes, new kitchen, this, that, the other. We're looking for those things that they can't
Good.
see, and we're reporting that stuff back to them
Yeah.
on the showing proudly, right?
Good.
Because the kitchens, bathrooms, yes, they matter, but we can all see that, right?
Correct, yeah.
Now, a lot of things that we run into, and Dan's joining us here today. Dan works for AW for You. He's came from the insurance business, actually, so he may pipe in here with some more harder questions. Put you guys on the spot.
No
though.
worries.
let's
No
do
worries.
it.
We're
But I
prepared.
mean, if we're talking about knob and tube, you know, I'm a little too excited to talk about this one because I'm versed in it myself. But I love to get the insurance perspective on that the good old Kitec, and it's not just
Kitec.
limited to Kitec.
Yeah.
What's the other brands that fall under the same concern as Kitec? And just like knob and tube, how do we deal with Kitec?
Okay. So do you guys, first of all, there's a very easy way to tell if you walk into a home if it has Kitec plumbing. A lot of people can't figure that out. Sometimes it doesn't even have to say Kitec on it. If you grab the pipe and you just bend it, if it pops back into place, okay, it's most likely going to be Kitec at that point. If it holds into spot, that means there's some sort of metal inside that tube that's going to hold it to spot that'll stay there, which means it's most likely not going to be Kitec. Kitec always pop back. And the problem with Kitec is the joints. When the two pipes connected, that joint would actually expand and it would burst and you would have water damage in your home. We have a market for Kitec. It's expensive. It's not cheap. There is a solution for it. Unfortunately, we know a lot of newer homes have Kitec. I think they stopped manufacturing Kitec in 2006. So homes, I think, built from 98 to 2006 in certain subdivisions in Windsor, we know they have Kitec. It's all very obvious in there. Like I said, it's expensive. There's a solution to it. Our biggest struggle to it is that we have coverage. So when you buy home insurance and you have a mortgage, the mortgage, all they care about is that you have fire insurance. They don't care if your home floods. They don't care if you have break-ins. They don't care about that. Their only concern is their financial gain, the bank. So if the house burns down, they want to make sure that they get paid.
Yeah.
So when you buy a home insurance policy that has Kitec plumbing, there's usually a deductible just on your water coverage of $25,000. So it's like you're not even getting coverage for it, essentially. You know what I mean?
Right.
So again, you got to educate the clients. You're going to buy this. This is temporary. You got to take the plumbing out. You got to replace the
Is
plumbing.
that the consensus with Kitec right now with insurance companies? Is that you got to replace this? Is that where we're at right
You
now?
don't have to, but I'm telling you to
Right.
educate your client. Tell your client. You don't have to, but if you want to reduce your home, if this is your home for the next 20, 30 years, you're going to be paying at least 50 to 100% more for insurance on this property, depending on the value of it. Over the course of 20 years, you might as well replace it. You might as well get rid of it. And if something happens, at least you have coverage. Because if a pipe bursts and you got $15,000, $20,000 in damages and your deductible is $25,000, well, you're not putting a claim and you got to cough up 20 grand from your pocket.
Yeah.
It's unfortunate.
I'm a 1350 square foot raised ranch that presents myself over on Pearson in East Riverside, and I got Kitec. What's my insurance looking like on that? No pool, no nothing.
So a home on that, based on 1350, like a raised ranch, finished basement, the replacement cost on that would probably be anywhere in the range of like $650,000 to about $850,000. Okay, depending on the features. It has bathrooms and such.
Yep.
If you got one mortgage, good credit, and we have your car and home insurance, we can do it all. If it's Kitec, you're probably looking at closer to $3,000. If it's a regular home insurance policy, you can get it for about $1,000 sometimes.
There you go.
Yeah, you're literally half, maybe 15.
So-
And
You
I've
know what I
always
mean?
always explained Kitec as to replace it.
Yeah.
Bigger house, bigger roof, right?
Correct.
It's about the same cost as replacing a roof. right?
Yeah.
That's how I've always looked at it.
Yeah.
I mean, the biggest cost to the Kitec is, listen, if you're a ranch, it's going to be less because
Correct.
you're not going up the walls or anything like that.
Correct.
If your basement's unfinished, it's actually quite, we'll use the word cheap loosely, but
Correct.
it's actually feasible
100%.
to replace and quite easy for a plumber to do.
Yeah.
And Paul, if you don't want to pay $3,000, $3,500 a year for home insurance because you have Kitec, well, as it was mentioned before, a solution to that is to go ahead, buy a 3-month policy, buy a 4-month policy, if you already have the intentions to remove this, obviously. So if you have the intentions to remove the Kitec, you can go ahead, buy a 3-4 months policy from us. Once you remove the Kitec, we can remove you and switch you over to a different company that's going to give you that price for $1,000 or $1,500. So there's definitely solutions if you're willing to go ahead and change it.
Yeah.
There's definitely solutions. Hey, and if you're willing to keep it and you don't want to change it, then there's solutions for that too. You just got to pay the premium for it. Yeah, you just got to pay for it.
Kind of
That's
that
all it is.
dialogue open though with your realtor and your
100%.
insurance broker, and everybody needs to know what's going on. So the insurance brokers can present you with the options and do a cost benefit analysis on it, right?
Yeah.
Like I mean, 3 years later, it's an extra $6,000. Well,
Correct.
that replaces it right there, pretty
Correct.
much, right?
Right.
I'm sure you can get that replaced for that.
So one thing I want to touch on that a lot of people don't know is what are the factors that affect your premium for the insurance? Because a lot of people just don't know.
Right. So a lot of things that are going to affect your factor for insurance, they're going to affect the price. One of them could be your age, could be your postal code, which area you reside in. Like I said, your age plays a role. Another big one, believe it or not, for home insurance, property insurance, is your credit score. If you have a good credit score, most insurance companies are going to recognize that, and they're going to give you a very, very good rate due to your credit score. Another thing people would look at, if you want to talk auto insurance, for example, we can talk about age. Drivers over 25 are more likely to get less premium, pay a less premium than drivers that are under 25 years old, or G2 drivers, for example. And then, going to the homes, if you've been a homeowner for 25 years, that's going to help you reduce your rate. That you've had a home before, you've been a homeowner for a long time. Hey, if you're mortgage free, you're going to get a discount for that too. So all these things, they're looked at as far as when it comes to pricing on insurance. So a lot of things to look at. You're going to look at the age, you're going to look at the credit score possibly, you're going to look at if they're mortgaged, if it's 2 mortgages on the property, if it's 1, if it's none. So a lot of these things are going to play a factor. Now again, touch even more on that, you're going to have the size of the home, right? So again, hey, you're buying a bigger home, you're going to pay more in insurance. You're buying a smaller home, you're most likely going to pay less in insurance. Age of the home. So sometimes, you figure, hey, I'm buying a smaller home, but I should be paying less for insurance. Well, that's not always the case, because you could be buying a home, that was built in 1920, 1910. It's over 100 years old. So the insurance company is going to recognize that this is an older home, and from that point, they're going to take their risk management and they're going to see what's the chances of something going wrong with this house, right? So all those things, they take a huge part when it comes to pricing.
Do you have to have home insurance?
Well, if you have a mortgage, you do. If you have a mortgage, you do, because your mortgage company wants to guarantee their money in case there's a loss.
More importantly, a fire, from what I understand.
More importantly, a fire. Honestly,
other
more
stuff.
importantly in Windsor, and this is aside from the mortgage, right? But just being in Windsor, hey, I'd rather sell you. We're always going to sell you fire insurance, because the actual standard clause in a homeowner's policy is fire insurance. That's a standard thing. So everything else is additional coverages, but your standard coverage is fire insurance when you buy a homeowner's policy. In Windsor, if I could, I would, and I always tell people this, right? I say what's more important in Windsor is not even a fire. Even though fires do happen, they're unlikely to happen compared to a sewer backup claim.
Right.
Sewer backup is your biggest worry in Windsor when it comes down to home insurance. That's the number one thing that we see come through the door is sewer backup claims, definitely.
And so finding coverage for sewer backup in Windsor, because there's a lot of floodplains, if you're closer to the water, you're higher risk and everything. What are some ways that people can alleviate that risk or find better coverage for it? Do the insurance companies offer different limits of coverage, or do they just not offer it at all? Or
So depending on the postal code, that's what plays the biggest factor. Okay, so some postal codes will get some of our carriers that simply say no water coverage. Like this gentleman doesn't get any water coverage, and then you throw in another postal code and it tells you this guy gets unlimited water coverage. And then you have companies that obviously have a cap. Well, they'll cap you at 10,000, 20, 30, 40, et cetera.
Right.
Now, to get these to get increased, to get better coverage, there's something that the homeowner can do. Having a sump pump and having a backwater valve. Those two things will help a lot to get you better coverage on your home insurance. Other than those two things, and then the history of the home, if it's been flooded or not, there's really nothing else that the client can do to get himself to have better coverage. Because some insurance companies are just simply set. It's a filed rule. This is how much this postal code is getting, and that's it. I don't care if he's got 5 sump pumps in there. That's all he's going to get is this amount of money. So yeah, there is limits. There is a little bit of ways around it, but other than a sump pump and a backwater valve, there's not much more that you could do. And those two things make a huge factor. Yeah. When we have rainfalls that happen and where a lot of claims are coming through, it's the homes that don't have these things.
Right.
That's why they're being flooded.
Good.
Right.
So, and not just a regular sump pump, some sort of generator that if the power goes out, your sump pump is working.
Liberty water backup or the
Correct.
watchdog.
A battery or something or generator on it so that, you know, when it rains, lightning strikes, your power goes out, your sump pump's not working.
Right.
So it's kind of pointless, right? You got to have something for it to operate while the
Which
power
should
goes out.
be like code where that should be separate from. But I mean, I'm not going to get into
exactly.
code. That's a different a different podcast. But we got a little bit of a live audience here today, so we got some questions coming in from them. So Chantel wants to know what's the difference, or sorry, when should people start shopping for home insurance? So we're out there, we're looking for a house. We've got the buyer. When should the home insurance process start? I would think when you know what the house is.
So yeah, the minute you decide which house you want to go with, so you've been shopping and you've been looking at multiple homes. I assume you guys are realtors. You must take your clients around to look at multiple homes before they make a decision. That's part of the business. Once your client decides that this is the home that they want, I'd say the minute an offer goes in, the minute an offer goes in, it's submitted. It doesn't even have to be an accepted offer, but this will give you an idea, basically, if it's feasible. If this is going to work into your budget. Can I do this or not?
So I've been doing this since about 07. So 07, 08, 9, 10, 11, 12, all those years, there was 3 clauses in every offer. Inspection, financing, and insurance.
Right.
I could copy and paste every single one of my offers had those conditions. So I think we can probably expect that to come back. Now, again, if you educate your buyer and then you say, listen, one condition is the same as having 100 conditions. That insurance condition may not make it in there, but it's still hidden in there somewhere. And then that's the time that once you get an accepted offer to start shopping it around.
If you have a good broker and you deal with a good brokerage like ourselves, you don't even need to put that in as one of the conditions.
Right.
Because by the time you figure out the other conditions, we're going to have maybe a 24-hour turnaround. Most likely less. If it's a simple property, it's home and auto, just a homeowner's policy. It's not, a student rental with 12 students living in there. It's something simple. We're going to be less than 24 hours to respond to you. So you're going to have a very good idea of what you're paying the minute you give us a call. The minute you give us a call within the same 10 minutes or the same hour, but whatever it is, it's the same day. You're going to know exactly what you're paying.
Let me ask you a question as a realtor, right? And again, these calls are starting to come back to me where I get a call from the insurance person or the other realtor reaches out to me, says, listen, insurance company called, they want to know the amperage, this, that, the other. Why are the insurance people not going to the houses and finding that out themselves? And relying on us to provide that information.
So when you call us and you're calling for a quote, okay, and the home is 50, 60 years old, so we don't know what it is in there. It's an older home. I don't know when it's been replaced. For me to go out there and take a look at the property when you have even bought insurance from me, you're not even my client, or I'm just giving you an estimate, it's not going to happen, or I'm going to go and take a look at the property.
Right.
But what we do at Premium Insurance, we make it really easy. And we work with the realtor. We say, just go and take pictures. Just take pictures, send it to me, and I'll tell you what's in there. If you can't figure it out, I'll figure it out for you. Or I'll tell you where to go look. It's not rocket science. And I always say, I always get confused when a buyer comes to me, he doesn't know these things. It's like, this is your home. It's probably the biggest investment that you do in your life. You should know how old the roof is and what kind of furnace you got in there. It's important to know these type of things. And lately, because how the market changed where people don't get home inspections anymore, it's see a home, put an offer, no conditions, get it going. it affected our industry a lot, where customers didn't know what they had.
Right.
They honestly had no clue.
Well, that's another question that we had from Chantel was, do you need a home inspection to get home insurance?
So we don't. So especially if a home is like within like 20, 25, even 40 years old, we definitely don't, okay? If we do need an inspection, we will be the ones to order the inspection. After you commit with us, you agree to a price, we then call you up and say, hey, we're gonna come out and do an inspection on your home. We take a look at it. If something changes in the underwriting, where the plumbing is different, the age of the room, the house, or the square footage, we do an adjustment to the policy,
Right.
and we get back to you on that. But going back to when you said the best time to shop, you said something earlier. Buyers nowadays look at their monthly cost, their monthly budget. So sometimes you might be looking at a 1940 home and you say, yeah, it's an older home. The value is not going to be that high. Insurance won't be too bad. You'll call us and I tell you it's going to be high. Why? It's a heritage home.
Right.
It's an older home. This is not a $1,000 policy anymore. Just because it's a heritage home, it's a $2,000 policy. So it changes your monthly budget. Yeah. And I've always said this to my clients. I can say I'm going to reduce your price, but I can guarantee you every year I'm increasing your price on your home insurance.
Yeah.
There's nothing I can do about it. And that's generally because the cost of construction goes up every year.
Sure.
So the value of the home goes up. Insurance company has to cough up more money if something happens. So the premium is going to go up.
And you get coverage for that too. So
100%.
it's not, the premium is not going up because it's just going up as a rate increase.
We're giving you coverage.
There's coverage going in with that. So if they estimate a 3% inflation on the cost of rebuild, then that 3% is actually going to go towards the total cost of rebuilding your home. So you pay more money, but in return you get more coverages.
Absolutely.
So that brings a question, because a lot of people, they don't understand what the insurance even is. They just see a price and a company name, right?
Right.
So what are the components of an insurance policy? You mentioned rebuilding cost. What are the other limits and coverages down there? Like, what do they see on their declaration page?
So when it comes to property insurance,
Great
Question.
question.
Declaration page.
yeah, it's a declaration page.
That was a big
So
one.
when you're,
I know what that page looks like too. I'm like, oh, that's what it's called. Okay.
the policy itself, when people look at it, there's the obvious. There's the stated obvious. There's the expiration date. There's the start date. There's the name insured, the person that actually owns the policy. There's the home address. All that stuff, yeah, sure. You want to quickly look through it to make sure that everything on those documents is printed correctly. But when you go through and you're looking for those coverages, okay, a lot of the times now, those homes, what we do is when we're going to insure those homes, we put them through an evaluator. Okay, so we have an evaluator system, and it'll give us an evaluation of that home, what the cost of rebuild is. Now, our evaluator does not give us the market price of the home. It gives us the rebuild cost of the home.
Actually, that's a good one. What's the difference between rebuilding cost of the home and the market value? Because back in my insurance days, people would always be like, I didn't buy the house for that much.
Right. I'll give you a perfect example. You go to Toronto, okay? You go to Toronto and, you got a home that's $3.5 million, for example. Over here, that same home is $750,000.
The land is the expensive.
Right,
Yeah.
right, exactly. Now, you already own the land.
Yeah.
So the cost of rebuilding that home in Toronto, that same square footage will still cost you more than rebuilding in Windsor. But it's not going to cost you the $3.5 million that, that's the market value. So that's really the biggest difference is you got market value is what people are willing to pay for a home, and the cost of rebuild, what construction companies are requesting to rebuild these homes.
Yeah.
Based on square footage, based on number of bathrooms, based on how upgraded your home is. Do you have nice granite, or do you have, normal flooring, or whatever it is, right?
Yeah. The land's the land, right?
The land
If
is
it
the
burns
land.
down,
Yeah.
still burning down on that
Yeah,
land.
the
It'll
square
still,
footage is the square
it'll still
footage.
be
So
there, yeah.
the cost of
That's-
rebuilding.
Dan, what you were saying, 5 years ago,
Yeah.
when I would give a quote to a guy, I'd show him his building cost, $450,000. He'd say, I didn't pay $450,000, I paid only $300,000. Now, when I do it, I'll show building cost $500,000. The guy say, I paid $650,000.
Yeah.
It's changed so much.
Yeah.
The industry's changed so much. And with insurance companies, we can actually still leave it at the $500,000 because we know how much it costs to rebuild a home. You paid a premium for that home, and you also paid for the land.
Yeah,
So,
absolutely.
Yeah.
Absolutely.
And to touch what you were saying, Dan, about what to look on for coverages, right? So you got, the basic stuff that everybody can read. But the number one thing that I say you'd really want to look forward to looking at is your water coverages. Your water coverages are super important, especially if you live in Windsor. If you live in Windsor, if you live anywhere, right? It's, I think the number one cause of disaster right now is water damage. And that goes across, North America. So that's the number one thing a lot of people need to look at is their water coverages. That's what I would always recommend, and that's what I always say is, hey, make sure you're getting the right sewer backup coverage. Make sure you have overland water. Make sure you have these things in place.
Yeah, that's good. It's a good
Yeah,
point.
for sure.
Good point. Guys, being respectful of time here. One, any last words? And two, to piggyback off that, how can everybody get a hold of you guys if they're looking for insurance themselves?
So if they want to give us a call, you can give us a call right away, right to our office. We're premium insurance brokers. You can find us online. We're an award-winning brokerage, right? We won the community votes. We've actually only been open since 2019. We have many years of experience in the industry, but we've only been open since 2019. Shortly after that, we faced COVID as well. So in that meantime, we still were able to grow very fast. People like to deal with us. The fastest way to find us is, go find us online, Premium Insurance Brokers, Google us. We're right on Google, 3063 Google. We have a nice location, and basically, we're good at what we do. We're very good at what we do.
Definitely very responsive, and they'll get back to you very, very, very quick as they should, right?
We're a one-stop shop. Like, you can come in, you can buy your home insurance,
Commercial?
your car, your commercial, your life insurance, your travel insurance, your pet insurance. You can buy it all. So we sell it all. We can cater to everybody. And we make things happen, honestly.
Yeah,
like
nice.
we're really blessed at what we've been able to accomplish and what we've been able to do. And we work well with realtors, we work well with lawyers. We'll make things happen.
Especially those challenging cases, right? You guys take them
100%.
head on and just figure out a way and present options to everybody, right?
100%.
Well, we like I said, we are award winning. We've won 4 awards in less than 3 years. So I think, we know how to face those challenges.
Well,
we
hey,
do good at it.
Congrats on all your success.
Appreciate it.
looking
Thank you for
forward
having
to
us.
Continue to work with you guys, and thanks for coming out. You brought some goodies for us here today too,
No
and
problem.
Thank you.
I got a full belly and about 4,000 coffees in me. I'm ready to rock for the day.
That's good.
For sure.
Okay, thanks, guys. Appreciate it.
Thank you.
Thank you.
Appreciate it.
When you're looking at a home policy, the number one thing that not the number one thing, but what you really want to look at, you want to look at a lot of things, right? The policy itself, when people look at it, there's the obvious. There's the stated obvious.